Hello, and welcome to today's stories of successful business exits. My name is Brendan Freeman, and I'm the president of private wealth for First Business Bank. In today's panel discussion, we're going to focus on selling a business, what that entails, and some tips to achieve success. Our experienced panelists are going to focus on the current environment for mergers and acquisitions, common ways that deals can fall apart, preparing to sell from a bank perspective, and how do you manage your time during this process? So without anything further, let's jump right into the discussion.
Welcome to Nate Herbst from Paradigm, Matthew Peterson from Godfrey & Kahn Law Firm, and Jim Hartley from First Business Bank. I'm really excited to speak with you all today. Nate, you started your company in 1999 and recently sold it. Congratulations. Can you just introduce yourself and your business for everybody?
Yeah, thank you. Thanks for having me today. Paradigm was started in 1999, and my wife's uncle had an idea to build software for the window industry. And as just time went on, we grew the business, and we grew what we did from just windows and doors to helping manufacturers, to retailers, to helping builders and contractors. And I think it was our 21st year, and we just sold the company this summer.
That's great. Matthew, you're a corporate attorney at Godfrey & Kahn in Milwaukee. Can you share with us a little bit about your practice and how you would help clients negotiating a business sale?
Yeah, sure. And thanks also for having me. I am a corporate attorney, which is kind of a broad umbrella term, but what that means here is we focus on business transactions, and namely M&A transactions. So representing buyers and sellers in business transactions, both privately owned, family-owned businesses in sales, but also kind of large corporates on acquisitions and divestitures, and then also private equity and private equity-backed transactions. So I would say I spend at least 80% of my practice doing M&A transactions and negotiating M&A transactions.
So you've shared with me previously that you're busier now than you've ever been, and I've heard that from some other M&A attorneys. Do you have any insider perspective on why that is? What is it about the current market conditions that are keeping you so busy?
Sure, yes, and it is no doubt it is a very booming M&A market right now. It's certainly the last 6 to 12 months is the busiest I've been. I'm in year 12 at the firm, but I could talk to M&A partners here at the firm that have been here 30 years and say the same thing. So it's an extremely robust M&A market right now. I've talked to contacts at investment banks that market and sell, run auction processes to sell companies. I have heard kind of anecdotally that they're in a position for the first time where they're actually turning away deals just because their backlog is so full with where the M&A market is today. So, with the caveat that every deal is different and every, motivations of buyers and sellers and every deal is different, generally thought of as the reason behind this is kind of a convergence of several factors. One, it's institutional money, at private equity firms, family offices, venture capital firms is at an all-time high. I can't say I know all of the reasons why that is, but it's some function of, the baby boomer generation, having unprecedented levels of savings from a historical perspective, and they're trying to diversify. Yeah, they could put the money in the stock market, but a lot of them become, hey, it's more fun, more exciting to maybe plop that into a private equity fund. But then also, institutional money, pension funds, et cetera, are putting a lot of their funds, or more than in the past, into the private equity market or the venture capital space to further diversify. So there, you might hear the term dry powder. There's just a lot of dry powder and a lot of money to be spent at the PE level. And private equity funds are required, by regulation and contract to deploy those funds or risk needing to give it back to investors. So you have this big chunk of money that needs to be deployed and spent. And so then kind of downline from that, right, the demand is high, and therefore pricing and multiples of sellers is going up, a little bit of a seller's market in terms of pricing still, and therefore more supply trying to meet the demand.
Jim, you're the president of First Business Bank, and you've been working in commercial banking for about 25 years. Can you share with everybody how First Business Bank would be involved in a business sale transaction?
Sure. Yeah, and our target client really fits in well with Matthew and what his clientele looks like, and certainly with Nate's company having been a client of ours. Companies between say $5 and $100 million in revenue is kind of our target, that middle market company. And many of them, you can Google a lot right now about selling your business, but many obviously have never been through this before. And so the value we think we bring is really connecting people to our business owners, advisors such as Matthew, accountants, other clients that have been through this before. And I think just that experience gives them comfort and an idea that, okay, there's a playbook here. There's a checklist of items I can go through. And as I go through that and I work my plan, it gets me to a positive result. And so I think that's the biggest role we can play. Obviously, there are some financial things that we can help with in terms of the multiple and preparing the business to get ready for sale. And then on the flip side, once the company is sold, our team of investment professionals and estate planning and tax advisory services can help on that side as well. So it's kind of pre and post sale. We feel like we can add a lot of value to the transaction.
Matthew shared with us that he's been busier than ever on the legal side. What have you been seeing on the banking side the last year or so that's maybe different or unique from previous years?
Yeah, it's the same story. It's been unbelievable in terms of the activity level. And Matthew mentioned a few of the elements of that. I would just add a couple things. One is, purchase price is largely driven by earnings, both historical and projected earnings. And we're seeing, unless the industry that you're in is in a industry that's directly hit by the pandemic, hotels or restaurants, we're seeing many companies with record earnings. And so obviously that's driving purchase price and multiples higher. There's a record level of liquidity in the market. Our bank, most banks are at record levels of deposits. And some of that's due to the government programs such as the PPP loans, stimulus checks, the stock market and appreciation in that. There's just a lot of liquidity. And then thirdly, I would say the pandemic has brought the whole succession planning and even some business owners thinking about their own mortality, even more so having gone through this, where they, maybe leading up to this, they had thought about, when am I going to retire? It's really moved that timeline up months, if not years. And so if you put those things together along with some of the items that Matthew mentioned, it's leading to record levels of activity in the market right now.
With that background from the legal and banking perspective, I'm curious if you can share with us a little bit about your decision-making process, building a business over 20 years and putting all your time and energy into it. How did you know, or what made you think this was the right time to sell?
Yeah, as Matthew and Jim are talking, it just sounds like exactly our story. I mean, every single factor they both listed was what came knocking on our door this year, and you just really couldn't say no to in a lot of ways. Private equity funds came pretty strong early on and really set kind of an anchor of what we thought the value was, much higher than probably what maybe we would have expected. And then in the end, in our story, a strategic acquirer came in. Again, to the points that Matthew and Jim had mentioned, big balance sheet, need to show some innovation, want to continue to innovate, buying our company as well to get the talent in the company as well as the technology. All those factors from the tax situation this year and the unknown around that, post-COVID recovery of a business, what does that look like? Like things are booming right now, but we've heard costs of employment could be up 6 or 8% even next year. So there's just a lot of factors out there, and it just really kind of pointed its way to this is the time to do it. None of this was planned. None of this we sat out, we had a 21-year business plan, and this is what, no. I mean, it's just, but yeah, it's opportunity knocked.
So I'm curious if there are things that you know now, having gone through the process, that you wish you knew at the beginning that you can share with other business owners, what to expect, things like that.
I think it's about what Jim said and what Matthew being part of that. It's about building the right team around you and thinking about this before the transaction actually happens. I know people have said that before. And it's true. The more preparation you have about getting your financials in order, getting the data together the way an acquirer may want to see it, finding an investment banker you potentially would want to work with. These are the long poles in the tent, and they're going to make or break your success in this sort of situation in terms of how to sell the company. We were able to put our team together internally and find an external team to partner with pretty quickly, but preparation can help a ton.
So Matthew, I'm curious from your perspective and experience, what are some common pitfalls or roadblocks that may come up that business owners should be prepared to address?
There are several. Let me reframe the question a little bit to say what has the most likelihood to derail a transaction once you're, say, post letter of intent stage and getting to closing. I'd say the most likely to derail a transaction is struggling financial performance of the business during that interim period. It's difficult on management teams and business owners. It's effectively, hey, here's another full-time job to get through, the M&A process, the diligence process, negotiating the deal. There's people pulling business owners and management teams in 100 different directions. And you can't lose sight of the actual business during that process at the same time. I would say that is probably the biggest risk of a buyer either, coming back to a seller and saying either the financial performance, you've now missed projections for 2 straight months. We either want to pump the brakes and postpone this transaction, or perhaps more likely, we want to propose a pretty big haircut on purchase price. So I would say one thing that should always be in sellers' minds is through this process is don't lose sight of business operations. There's going to be distractions for the deal, but you have to be mentally prepared that you effectively are going to have 2 full-time jobs for a little while, and you got to fight through that because again, I would say struggling financial performance because of the distraction of management teams is probably the biggest risk of derailing a transaction.
Hey, can you share with us how you managed your time and energy being involved in negotiation to sell your business while also still leading your team?
Yeah, I'd be happy to. I was answering in my head the last question you asked to Matthew. I was answering in my head, and to me, it was an emotional roller coaster. And I think that was our story, and I think that's the financials. I could see we were lucky that we were really stable through that process, so we didn't really have that concern. But the balance is just ask more of everybody. Unfortunately, the select group of people that are on the transaction, you don't want to open up the door to every employee and every manager when you're going through something like this for pretty obvious reasons. So it's a real small group of people that are being pushed very hard, and some certainly harder than others. We had a really strong group around us, so that helped from the beginning. But there were several people, including myself, that put numerous hours in on weekends and nights, and kind of the work that you put in to start a company, you put just as much in, I think, to sell it at the end.
So Nate, there's this natural tension, I would say, when you're going through this process where the acquirer wants to do as much due diligence as they can before they give you a number. And you want to get a number before you put the people you just talked about that are going to be working nights and weekends through all that. And so can you maybe talk about advice for a business owner trying to manage that tension that just gets created through that process?
Yeah, you're right. It's a slowly expanding group of people, Jim. You start with a very narrow group, and you start talking to the banker with 1 or 2 people, and then maybe a potential private equity sponsor, as they call themselves, with 3 people or 4 people. What's really interesting is the private equity buyers today. I've never sold a business before, but they seem very streamlined. The process seems streamlined. They can give you a price within a couple of weeks in terms of what they pay for the business. So I think they've kind of tailored their process around the friction that you just talked about, so that you don't have to spend as much time up front. But it certainly was a concern, and the way we dealt with it was just limiting the number of people involved.
Jim, do you have anything to share about potential roadblocks that can derail a deal on the banking side?
If we're financing the acquirer, it's all about transparency in the process. Whether it's an M&A deal or any deal with banking, surprises are never a good thing. And so transparency around, how much equity cash is going to go into a deal. Is the seller willing to take a seller note back? Those are things, if there are black and white issues in a transaction, I would encourage both sides to bring those to the forefront sooner than later. We've seen a number of deals last for weeks and months, and then at the end of the day, the deal gets derailed by something that could have been or should have been brought up early on, such as if I'm the seller, I'm not taking any paper back. I need cash at closing, and that's just my deal. Well, if you would have told me that, 3 weeks ago, we wouldn't have gone through this whole process. So I would say just transparency throughout the process about what are the hardline yeses and nos that you'll be willing to do during this transaction would be a key thing.
Nate, I'm curious, small business owners create a company, they work hard over years to build that company, make it attractive maybe to a future buyer, go through all of the emotional and planning process of doing succession planning. What's it like on the other side of the deal? What should somebody who's built a business over 20, 21 years, 25 years, what should they expect on the other side?
The word that came to mind was awkward. You build something for 20 years, 20 plus years. We'll figure out the actual date after this call. But I was the owner and now I'm the president. Is that different? It's maybe only different in my mind. So it's a transition. I guess we're only about 6 or 8 weeks in from closing. So it's still a little fresh for me. But there's a lot of questions about, well, what's the future look like, as I'd expect from management and staff. It's a little awkward and a lot of adjusting. And I think that's for the entire company, including, in my case, me being the entrepreneur founder of the company. It's across the board. What's to come? What's your role? How does this change things? So I think just really being careful about who you partner with and when you're acquired. Obviously that could be a big part of it. We've been really satisfied with who we partnered with. We had a strategic buyer. Builders First Source bought our company. And we've been really happy with the culture and how they've been working with our staff along the way. But yeah, awkward is probably the word that would sum that up.
Yeah, I'd like to add, Nathan, I thought it was spot on when you mentioned the emotional roller coaster earlier. That's something that, I remember early on in my career being surprised about, but, I probably shouldn't have been. And there are a lot of business owners that, view their company as their baby, and there's almost a sense of mourning when they ultimately sell it. So it's a factor that shouldn't be, tossed to the side. It's a real thing.
Nate, you throughout your career, and I've always admired this, you've never been afraid to invest in advisors around you and pay for service that you think can add value to your business, whether it was cyber fraud, insurance, or whatever it might be. And through this process, you've taken that same approach because you've always gotten a return on that investment. Is there any advisors through this process that maybe you didn't expect would add as much value, maybe tax or legal, or was anything that you say, hey, if somebody's going to sell their business, they should think about this person or this type of advisor?
Yeah, I think I think it's the lawyer, which is represented by Matthew on the call today. The lawyer is a big piece of the puzzle. Definitely handles most of the heavy work once you negotiate some high-level terms. The banker, most of your viewers would know that the investment banker is like a broker. They're selling the business. They're an important party in it, but really, in my experience in this transaction, is really the upfront part of it. It was kind of getting the net out there, saying yes or no, kind of a high-level strategy. You want to have the accounting team ready for tax-related discussions. There's more there than it seems in terms of how you structure the deal and how that impacts you with taxes. It becomes kind of gray, though. The lawyers, like Matthew, would know a lot of the tax implications on how to structure the deal. And then I think just trying to think of who else we might have engaged along the way. We had another individual that had been through a number of transactions that actually we did hire on the side just as a consultant and just made up a dollar amount. And And then also I'll just pick up the phone and I'll call people and just say, hey, what did you go through? As you know, Jim, I'm part of a network called YPO, and I was able to lean on a bunch of other members that had sold their businesses as well. Those are quick conversations, but they can be just having somebody else to talk to when you're going through this that's been through it before, that it isn't being paid by you in some way, shape, or form, is also probably super useful. But I think throughout all stages of your business, you really need to think about those partnerships. And we've been very fortunate. I think, Jim, we've known each other for 15 years, maybe. That's a story about how we've worked together when you came over to First Business. But a very important story of Paradigm is in 2018, we had a very tragic incident happen. And as a business owner, you could imagine the fear of having a company and all of your net worth is tied up in one investment. We had the fortune, we had the relationship, we had the good partnership with First Business that I think it was Corey and Jim said, we're going to see you guys through this. So really, while we had really a spectacular exit and there was a team involved in that, it's just as important that you build the team to get to that exit.
I think you're right. I think as the question you asked earlier, Dara, about how the bank plays a role in some of this as well. We've had, as I mentioned, a number of clients go through this process, and whether they sell to private equity or sell to an ESOP or a strategic buyer, we've been through that experience. And I think, like Nate said, there is a lot of comfort from the seller to talk to someone that's been through it and had, if nothing else, just allows them to understand that they've gone through this as well and been successful. I think there's a lot of comfort in that. And I think that's another value add that the bank brings. And I think as a business owner, having that humility to say, I don't know it all, and I do want to get someone else's opinion on this is another good step to take in this process.
Well, I want to thank Matthew, Jim, and Nate for sharing their insights and perspectives with us. It's been a really interesting discussion that I feel could go on all day, but I really do appreciate all of your time and insights. Thank you.
Thank you for tuning in today. We hope you found this discussion helpful. Please also be on the lookout for our next discussion on business acquisition and growth. In the meantime, if anyone on our team can help, please reach out to us, or you can find us at firstbusiness.bank.